Welcome back. Today we are conducting an exhaustive deep dive into Costco's latest earnings report. We have 12 key charts to analyze, covering everything from revenue to renewal rates. Before we start, please like this video and subscribe to the channel for more institutional grade financial analysis. Let's get into the data. Starting with top-line growth, Costco continues to demonstrate its resilience and market dominance. Total revenue has shown a relentless upward climb over the decades. In the latest quarter, revenue grew by 9.2% year over year, reaching record heights. This growth is consistent with their 2-year and 5-year trends. The 5-year compounded annual growth rate stands at 9.2%, highlighting the stability of their expansion strategy across global markets. Looking back to the 1980s, the chart visualizes one of the most successful retail stories in history with almost no interruptions in growth. Costco's model thrives on volume, and the increasing heights of these bars show that more consumers are choosing the warehouse model for their daily needs. Even in a competitive retail landscape, Costco continues to take market share from traditional grocers and big box retailers alike. The resilience of this revenue stream is a key reason for the stock's premium valuation, as it proves to be durable through various economic cycles. This strong foundation of sales growth provides management with the capital needed to further invest in logistics and digital transformation. When we break down revenue by segment, the mix between sales and membership fees reveals the core engine of Costco's unique business model. Merchandise sales make up the vast majority of the total revenue, shown here in blue, while membership fees represent the orange segment at the bottom. Crucially, while membership fees are a small portion of revenue, they contribute significantly to the company's total operating income. Both segments show consistent quarterly increases, reflecting not just higher sales volume, but also a growing and loyal member base worldwide. The recurring nature of the membership revenue provides a high degree of predictability to Costco's cash flow, which is highly valued by credit analysts. As the company opens more warehouses, this membership revenue segment automatically scales, providing a high margin floor to their financial performance. The sales segment growth of 9.2% this quarter confirms that members are spending more per visit and visiting more frequently than in previous years. Overall, the health of both revenue segments underscores the robustness of the membership-based retail model in the current inflationary environment. The physical footprint of Costco continues to expand globally, as shown in the warehouse growth chart. This physical presence is a key driver. Management's disciplined approach to opening new locations ensures each warehouse reaches profitability quickly, contributing significantly to the overall bottom line results. We see a steady climb in total warehouses, reflecting a successful expansion into major international markets, including China, Japan, and Western Europe. Each new warehouse opening serves as a powerful catalyst for local membership growth, further strengthening the company's network effect and brand power. The efficiency of their supply chain is further optimized by this increasing density, allowing for better inventory management and lower logistics costs. Costco's real estate strategy focuses on high-traffic areas, ensuring that each location is a long-term asset with significant real estate appreciation potential. With a strong pipeline of new locations planned for the coming years, physical expansion remains a primary driver of the company's growth. In conclusion, the warehouse expansion chart visualizes a company that is successfully scaling its physical infrastructure to meet massive global consumer demand. Membership loyalty is reflected in the steady rise of cardholders, which currently stands at record levels across all of Costco's global regions. The cardholders chart shows a consistent upward trend since 2007, illustrating the enduring and powerful appeal of the Costco value proposition. A growing member base translates directly into higher sales volume, as loyal members tend to consolidate their household spending at Costco warehouses. We also see a significant increase in the number of executive members who typically spend much more annually than standard Gold Star members. This ecosystem strength is a major competitive advantage, creating a highly reliable and predictable revenue stream that is less susceptible to market volatility. The value members perceive through consistently low prices and high-quality products is the primary reason for this continued growth in the cardholder base. As Costco expands its digital offerings, these cardholders are also engaging more through online channels, further increasing their total lifetime value. Overall, the cardholders metric is a vital sign of the company's health, representing a loyal community that drives long-term financial success. Perhaps the most impressive metric in Costco's entire portfolio is the renewal rate in the US and Canada, which remains at industry-leading levels. Consistently hovering around 90%, this rate is a massive signal of member loyalty and the perceived value of the membership fee. The chart shows incredible stability in renewal rates since 2006, proving that Costco's business model remains relevant across generations of consumers. High renewal rates significantly reduce the cost of customer acquisition as the company can focus on retaining its existing, highly profitable member base. This stickiness allows for highly predictive cash flows, enabling management to plan long-term capital investments with a high degree of confidence. Compared to traditional retailers, this renewal metric is a powerful competitive moat that makes Costco's business model incredibly difficult to replicate. As international markets mature, we expect their renewal rates to converge toward these North American levels, providing further upside to the business. In summary, the renewal rate chart is the ultimate proof of Costco's brand strength and its ability to consistently deliver value to its members. Turning to profitability, EBITDA trends showcase Costco's incredible ability to maintain and expand margins even during periods of global inflation. The upward trajectory of the blue bars represents a company that is scaling its operations efficiently while keeping a tight lid on administrative costs. Looking back to the early 1990s, we see the transition into a consistently profitable machine, with EBITDA growth accelerating significantly in the last decade. This margin preservation power is a direct result of their massive buying power, which allows them to negotiate favorable terms with global suppliers. The steady flow of membership fees also supports this EBITDA growth, acting as a high-margin buffer that protects the bottom line during price wars. We see clear evidence of operating leverage, as the company is able to grow its profits faster than its total revenue in several key quarters. This strong EBITDA performance provides the liquidity needed for dividend payments and occasional special dividends that reward long-term shareholders. Overall, the EBITDA chart highlights a financially disciplined organization that is built for long-term sustainability and consistent profit generation. Net income follows a strong upward trajectory, proving the scalability of the warehouse club model. The chart shows consistent growth over the decades. In the latest reporting period, net income reached nearly $2 billion, a testament to the company's operational efficiency and buying power. This bottom-line performance is a direct result of efficient inventory turnover and incredibly low overhead costs maintained across all global regions. We see that even during periods of global economic uncertainty, Costco's net income remains resilient due to the steady and recurring membership fee revenue. The 10-year compounded annual growth rate of over 14% confirms that Costco is a mature but still high-growth organization in the retail sector. Management's ability to maintain these profit levels while offering members the absolute lowest prices possible is a truly unique competitive advantage. These healthy profits directly fuel the company's massive capital expenditure needs, allowing for the opening of dozens of new warehouses and tech upgrades. Overall, the net income trajectory provides a clear picture of unmatched financial strength and operational excellence for institutional and individual investors alike. Earnings per share data confirms consistent value creation for shareholders over the last decade and beyond. The chart shows a powerful long-term uptrend. In the most recent quarter, EPS reached record highs, demonstrating the underlying profitability of each individual share of Costco stock in the public market. This growth is particularly impressive given the hyper-competitive nature of the global retail industry and the traditionally thin margins involved in grocery. The rising EPS also reflects management's discipline regarding share issuance, ensuring that earnings growth translates directly into per-share value for the remaining investors. While there was a slight dip shown in 2025, likely due to a one-time non-operational adjustment, the long-term trend remains firmly and healthily positive. Analysts often use this robust EPS data to justify the stock's higher-than-average price-to-earnings multiple compared to its retail and big-box peers. The historical performance of EPS provides a solid foundation for future earnings projections and valuation models used by leading Wall Street firms. In summary, the EPS chart visualizes a multi-decade story of compounding wealth for Costco's long-term and dedicated shareholders around the world. Costco has a unique approach to dividends, characterized by consistent quarterly growth and occasional massive special payouts that reward loyal investors. The steady upward march of the blue bars represents the regular quarterly dividend, which has grown consistently over the last 2 decades without interruption. The dramatic spikes in the chart, such as those in 2013, 2017, 2020, and most notably 2024, represent special cash dividends paid out from excess cash. These special dividends significantly boost the total shareholder return, making Costco one of the most rewarding stocks in the entire retail sector for income seekers. Despite these large payouts, the company maintains a very sustainable payout ratio, ensuring that dividends are well covered by recurring net income and free cash flow. This commitment to returning capital is a clear signal of management's confidence in the long-term cash-generating power of the warehouse club business model. While many retailers struggle to maintain dividends, Costco's fortress-like financials allow it to lead the industry in both regular and opportunistic shareholder returns. In summary, the dividends chart illustrates a shareholder-friendly culture that prioritizes long-term wealth compounding through disciplined and generous capital allocation. The balance sheet remains a fortress, with significant cash reserves and very low comparative debt levels, providing unmatched financial flexibility in the retail space. Looking at the green bars, we see a massive cash pile reaching over $18 billion, allowing the company to fund its own global expansion. Total debt, shown in red, remains remarkably low compared to the company's multi-billion-dollar scale and its massive annual EBITDA generation. The chart shows a long-term trend of increasing liquidity since the 1980s, reflecting a very conservative and disciplined approach to financial management by the board. This war chest of cash gives Costco the ability to seize strategic opportunities, whether through inventory front-loading or large-scale technological investments. The company maintains a strong net cash position, meaning its cash on hand far exceeds its total debt obligations, a rare feat for a global retail giant. This financial stability is a key differentiator that allows Costco to navigate economic downturns with ease while continuing its aggressive warehouse opening schedule. Overall, the cash and debt chart visualizes one of the strongest balance sheets in the public markets, providing a solid foundation for decades of future growth. Looking forward, Wall Street analysts maintain a positive outlook for the remainder of fiscal 2026, as evidenced by the tight clustering of estimates. For the current quarter ending in May 2026, the average EPS estimate among 20 analysts is $4.94, representing continued strong performance. The estimates range from a low of $4.78 to a high of $5.14, suggesting a high degree of confidence in the company's near-term earnings power. For the full current year, 24 analysts have provided a consensus estimate of $20.33, highlighting the massive scale of Costco's annual profitability. Looking even further ahead to next year, 28 analysts expect EPS to grow to an average of $22.32, indicating sustained double-digit growth. The high end of the next year estimates reaches over $23, reflecting optimistic views on potential membership fee increases and global expansion. This strong analyst consensus serves as an important validation of management's strategy and the long-term viability of the warehouse club model. In summary, the analyst estimates chart paints a picture of a company that is expected to continue its market-beating performance well into 2027. Finally, the valuation summary shows a company trading at a premium reflecting its high-quality status. The market cap stands at $436 billion. Costco's price-to-earnings ratio is 96.6 on a trailing basis, but drops to 46.4 on a next 12 months basis, reflecting expected growth. The price-to-sales ratio of 1.52 and price-to-book of 13.6 confirm that the market values Costco significantly higher than its traditional retail peers. The enterprise value to EBITDA ratio of 33.08 is another indicator of the premium investors are willing to pay for this level of stability. Free cash flow yield stands at 2.09%, with an adjusted yield of 1.88% when accounting for stock-based compensation impact. Margins remain tight but healthy, with a 2.99% profit margin and a 3.82% operating margin, typical for this high-volume model. Quarterly earnings growth of nearly 14% and revenue growth of over 9% prove that Costco is still expanding at an impressive rate. In conclusion, the valuation summary reflects a best-in-class asset with strong cash flow, low debt, and a very clear path for continued dominance. In summary, Costco's Q1 2026 results reinforce its position as a retail powerhouse. The data shows consistent growth and unmatched member loyalty. Thank you for joining this analysis. Please share your thoughts in the comments below, and we'll see you in the next deep dive analysis.